Well, good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Monday. And yep, I'm back from my trip. It is Monday, the 25th of April, 2022, just getting on to 7 p.m. Central Time. Interesting day. You wake up and what do you see? You see the event taking place with China, Beijing possibly going into a shut-in. They're still shut in most of Shanghai. And now you're going to shut down the other major city of China. We're not dealing with 10 million people in a city or 20. I mean, we're dealing with insane numbers. A small city in China, these industrial cities are 10 to 14 million. So this is a lot. What does that do for demand? Puts it in the toilet. People can't go out. They don't do anything. What's it do for food? Puts it through the roof. There's a run on food. Do you honestly think the people in Shanghai, that message of the panic that they're locked in was lost on Beijing and they're going, let's go out and get all the food we need. We may be in a lockdown for 30 days. Let's get our medical supplies. Whatever's on in a shopping place, if they don't control it, it'll be off the shelves. 1, 2, 3. It's creating a real bad situation. It's a draconian measure. It's sort of nuts. We're going to lock the people up until the disease goes away rather than vaccinate them. Vaccines do not stop the spread of COVID. I keep getting messages from you. I don't want to even read them anymore. It mitigates how bad it will be if you get it. That is what it does, okay? It doesn't stop that. It changes it. You get a flu shot. It doesn't stop you from getting the flu. It mitigates how bad it could be. Please understand all that. Well, the Chinese don't even have a good way to mitigate. That's their issue. I had a ball on the trip. I love driving across the country. Haven't done it since my college days. And if you look at my hair, that was a very long time ago. I drove from Chicago into Northern California, into the mountains, got as high as 8,000 feet. They're taller. And we had to go to an area where my son is based. And wow, I could not believe it. Quite a trip. You see an awful lot. But here's the thing I'm mentioning. In America, the road money's being spent. I was on I-80. It is under construction everywhere. Good construction. Parts of the bill look great. I saw only 3 bridges, because I did count, but major new bridges going up on my trip. So that was very good to see, but I'd like to see more in the cities. I was in Sacramento. They could use help. There's different areas that could use the help. Probably the prettiest city, I couldn't believe it, Salt Lake City. When you're there, your jaw drops as you look at everything. What a beautiful place to live. Okay. So in looking at the market, the S&P 500 index, you rally and you keep failing it on this whole time frame now at the beginning of the year. Once you got under the 18-week average, it's just been a failure all the way through. I don't think you're going to get up and get the April gain. All right, it's the 25th. That's going to be very hard to get. So this will be the 6th year out of the past 26 years that April did not produce a gain. It'll be the first year, this is what I'm thinking will happen in the futures, in the past 15 that April did not produce a gain. That's pretty much what I've come to the conclusion. Since I did my report, you've not one time had a buy signal. So I feel very vindicated. Had I got a buy and it didn't work, I'd feel terrible. The buys never came out. Any way you look at this, we'll go through it. Where's the buy signal in the S&P? You had lower lows, higher highs. You came out of shorts, maybe that was it. You certainly didn't clear any of this. You're in resistance. Look where the market failed. The 18, the 200, and the 100-day average of closes. Where do I think the market's going to bottom? What if I tell you right now? Bollinger Band. Why? Because you're not embedded. Oversold market into the Bollinger Band often. The word is not always. Often begs a big rally coming back, and all your resistance points are up here. It doesn't mean it can't go lower. It doesn't mean I'm going to be right. But I'll hang my hat on what I teach. I'm very comfortable with it. In the NASDAQ, different. You're embedded. So embedded means you've got several days in a row where both numbers that make up the slow stochastic are under 20, and you certainly have that by every stretch of the imagination. But this was a cover short area, not all the position. Different than the S&P because you're still embedded. Lose the embedded, then I think you can make a run to the 18-day average, wherever that comes in, and that ends that leg of the play. You're not there yet. In the Dow, you've gone from upper to lower Bollinger Bands. I hope that you don't need me to tell you the first time you get up to the band, the pros are coming out. First time you get down to it, the pros are coming out. Pros out. This was on Friday, and today you're getting your bounce already. Don't care, but that's what's going on. And you always pay attention to the slow stochastic. If you don't understand what I'm saying, please, 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 take your cursor, point up here, go to it'll take you to an icon, hit the icon, learn a bit about this. Look at my research area and the Enhanced Bollinger Band course that I have. In the micro mini Russell, same thing. You play for that to keep going through, not this character. Not going to happen, especially when you're not embedded. If you're embedded, the game can change on you. Until you embed, it rarely does. Now we get over to this is probably the VIX, takes a minute. There we are. The VIX got over the upper Bollinger Band. Let me just show you this, if it'll allow me to. It's a different feed, that's why this happens. There you go. Okay. You're over the upper band. Are you going to follow through? Well, the odds are the pros are coming out on those bands, all right? You need a breakout, and I've defined what a breakout is. When we get one, I'll go through it again. This is not a breakout. That's an attempt at a failure to pull back into the band. When you come to the T-bond market, this is a contra-trend rally. This is off the fears that the economy is slowing down, the Chinese event, and the FOMC meeting that is coming up. So you've come out, you've lost the bearish embedded reading. You got a 21 reading today. The odds favor you're going back to the 18-day average of closes. That might drop a little, prices up to midi, and that'll be the next, I think, resistance point. And that's where you're at this point. Let's get to the 10-year note. The 10-year note lost the embedded reading. Let me take it here. Didn't. It did. So where do you think I think it's headed? 18-day average of closes. You'll learn this whole idea as to what I do, why, how to play for these things, and away you go in the courses that I teach. In the dollar index, what do you think you should be doing on this break right through here? You're embedded. My morning subscriber videos in unison. That's what I was saying. And look what the market's doing, coming back up to those numbers. Okay, not every time does this work, but the percentages are high enough with money management, and you follow it, and you follow the rules, that's it. Throw the name of the chart off. That's the first thing you have to learn. Why? When you look at the chart, you're automatically going to have an opinion. That's the wrong thing. The only opinion you should have is the chart action. And if you can get to that next hump, it's amazing what happens. You really understand charting a lot better. And remember, don't get caught into the thing that the pattern has to do this. Patterns don't have to do anything. It's the probability of it occurring versus it has to happen. All that you had here is you took yourself in the euro out of the downtrend. Now, when that occurred on this break, I told my clients who had been short this market, because you're embedded, take some money off the table. I certainly, with the break today, left some on the table. That's okay. You're never going to get the bottom part, but I certainly, I have it in writing, what I wrote, what I do. That's what I was telling them on the road. I did when I was on the road. Every morning, I recorded my morning subscriber videos. So I did one for the futures, one for the ETF. That's what you call being loyal. You do realize you're beaten up. You're in a car 10 hours. You're driving all day long. You're not getting the best of food on the road. I'm sure you've done that. I ate as good as I could. But that's what happens. And I'd get up and, I really pay attention to my subscribers. I work for them. They don't work for me. In the British pound, this is a breakout to the downside. Now, what defines a breakout? Let me teach you something. My definition does not mean I'm right. Market comes out of the Bollinger Band, closes in the very bottom quadrant of the day's range. Follow through the second day. That's the breakout. So until the market gets back over these highs, I think on rallies you're going to see aggressive selling into this market, ideally up to the 18-day average. That'll be hard to get. There'll be other ways to come in. You'll probably embed. We'll see if I'm right on that. In Bitcoin, you're still with the pressure of the market to the downside. You're staying under the 18-day average. You are oversold. Not a very good market. There's got to be better things that are better looking than that. In the differential between Brent and WTI crude, well, it's crashed in for a reason. You know, it was out here. Which country's getting weak right now? China. What are they buying? Brent. They're not buying U.S. oil. That's why you're crashing in on the difference of the two. When you come, though, to it, the market's just looking at oil as oil. You're in a downtrend. Can you get to the band? I hope. That's where I think the pros are covering their shorts with both hands. And I think the bigger picture is still bullish. I could be wrong, but that's what I think. Same thing here. Trend is down. It's been very difficult to get short. Why? Where would you put a stop? It's so far away from spots, even if you sell the 18-day average, it's $5 away. I don't know anybody that's going to risk $5,000 on a futures contract just looking at it. You'll say trade the mini. It's still a monster risk. It's a hard one to catch. Heating oil, overbought. Is it going to embed? That'll be the big question. And in nat gas, this whole break came down. You watch. It's the 18-day average, the line in the sand. You're still in an uptrend. Higher lows, higher highs. That's the number you got to take out. Haven't done it. And will you get the bounce from there? That's going to be the big question of this market. We know why this is stronger than the other markets. Europe wants all our natural gas. We have a natural market. That's the place. So you want to learn more about this? It's so simple. Take your cursor, give it a click up there, and see what you learn. I'm Ira Epstein. You have a good day. I'll see you all tomorrow.